Sophia Nova here with Nova Brief walking through Tesla Motors' actual amended S-1 filing from June 2, 2011. This document is the real registration statement Tesla submitted to the SEC to go public. This is not financial advice. Stick with me to the end, because the numbers and risk factors in these pages tell the real story of what Tesla was disclosing at the time. Alright, let's start with what this document actually is. It is Amendment Number 1 to Form S-1 registration statement under the Securities Act of 1933 for Tesla Motors Incorporated, a Delaware company. The filing discloses plans to offer 5,300,000 shares of common stock to the public on the Nasdaq under the symbol TSLA, with the last reported price on June 1, 2011 at $28.52 per share. Tesla itself is selling all the shares in the offering. On the same page, it details two concurrent private placements that close alongside the IPO. Elon Musk, our Chief Executive Officer, Product Architect, and Chairman, will buy 1,416,000 shares directly from us at the public offering price for an aggregate purchase price of approximately $40,400,000. Blackstar Investco, LLC, an affiliate of Daimler AG, will purchase up to 637,475 shares for an estimated $18,200,000, assuming the same $28.52 price. These are the headline terms right in the prospectus summary. Now the business context the document lays out. Tesla designs, develops, manufactures, and sells high-performance fully electric vehicles and advanced electric vehicle powertrain components. It owns its sales and service network and has already commercially produced the federally compliant Tesla Roadster, which it says achieves a market-leading range on a single charge. As of March 31, 2011, the company had delivered approximately 1,650 Roadsters to customers in over 31 countries, with customers driving an estimated aggregate of over 11 million miles. Production of the Roadster was scheduled to end in December 2011. The filing then turns to the Model S, the four-door, five-passenger premium sedan, targeted to begin customer deliveries in mid-2012. Tesla plans an adaptable platform architecture for the Model S that will also underpin the future Model X crossover. The base Model S is described with an effective price of $49,900, assuming the $7,500 federal tax credit and a targeted 0 to 60 time of approximately 6 seconds. The company had received approximately 4,600 customer reservations, with a minimum refundable payment of $5,000 as of April 30, 2011. On the manufacturing side, the document states Tesla completed purchase of the NUMMI facility in Fremont, California, in October 2010, and entered a loan agreement with the United States Federal Financing Bank and Department of Energy for up to $465 million, of which $363.9 million is intended for Model S development and Fremont build-out. The company also discloses selling battery packs and chargers to Daimler for its Smart Fortwo and A-Class electric vehicles, plus a development agreement with Toyota for the RAV4 EV. Now the details section by section. The prospectus summary highlights the offering price, underwriting discount, and proceeds before expenses to Tesla Motors with an overallotment option for up to 795,000 additional shares. Risk factors begin on page 11, and the document warns investors to read about factors they should consider before buying shares. Forward-looking statements are flagged throughout, including plans to reveal a Model X prototype by the end of 2011 and commercial introduction in the fourth quarter of 2013, with targeted annual production of 10,000 to 15,000 units. Use of proceeds ties directly to the DOE loan facility and Fremont manufacturing ramp. On the financial side, selected consolidated financial data and management's discussion appear later in the filing, but the core narrative centers on the Roadster's 245-mile EPA range and the Model S range options from 160 to 300 miles. The company emphasizes its 35 issued patents and 207 pending applications as of March 31, 2011, along with its company-owned store network of 18 locations. Risks and caveats are front and center. The filing explicitly states the information in this preliminary prospectus is not complete and may be changed, and that these securities may not be sold until the registration statement becomes effective. It notes the EPA's intention to develop new energy efficiency testing methodologies that could significantly decrease advertised ranges for all electric vehicles, including Teslas. The document also cautions that no agreement has yet been executed with Toyota for production parts, and there are no assurances any such agreement will be reached. Additional standard S-1 risks around manufacturing scale-up competition, capital needs, and dependence on the Model S launch are referenced in the Risk Factors section, beginning on page 11. What this means is that in June 2011, Tesla was using this filing to tell the market it had proven the Roadster, at 1,650 units delivered, was moving to volume production of the Model S at 20,000 units per year, and was securing both public market capital and a $465 million government loan to fund the Fremont facility. The concurrent purchases by Elon Musk and the Daimler affiliate were disclosed as part of the same transaction. This filing shows a company transitioning from low-volume sports car maker to potential mass-market electric vehicle producer while still pre-revenue on its flagship sedan. I'm Sophia Nova, with Nova Brief keeping you ahead of the news.